Hey guys, so I said I wanted to elaborate on my switch from Hive Blockchain to Cleanspark, and so yeah, I thought let's go into some details on them, and I've put their data into the model that I used for my Hive Blockchain valuation before, and sort of coming out reasonably good figures. So yeah, let's take a look. So they're a $190 million market cap at the moment, listed on NASDAQ. The sort of analysis, forward PEs and all that sort of thing are going to be nonsense, partly because they're obviously sort of losing money on a gap basis due to sort of write-downs and sort of high electricity costs and that sort of thing, depreciation. So yeah, the sort of projections, even next year, projecting them into a loss, I presume are going to be based on Bitcoin not rising at all, which is obviously not what a lot of us think. So I wouldn't really take too much notice of this. So I think really in the financials, the only thing worth sort of looking at is the balance sheet. So you can see total debt has come up to $25 million in the last year. I think this has come down slightly since the sort of turn of the year. This is at Christmas or New Year's 2022, so I think this has come down slightly, but then cash balance is sort of quite low compared to previous quarters at 6 million. So yeah, it's they sort of tend to run quite a lean ship, and it's sort of bit of a red flag, no, maybe not a red flag, but a risk, I guess. If Bitcoin price comes down, then they could sort of need to emergency issue equity or take on some debt potentially, or start selling things cut price. So yeah, it's a bit of a risk that they don't keep too much cash on hand, basically relying on the Bitcoin price. But that's why we're in these sort of miners. So just looking at their website, sort of all the usual stuff, but where we are is sort of interesting that they're 100% US. A lot of the others are sort of in Canada and some in South America, some in Europe, that sort of thing, but they are entirely in the US. They have a co-located location in New York, and the rest are entirely theirs. So yeah, interesting. They'll be sort of using partly renewable and partly natural gas, from what I understand, all of these. So natural gas coming down certainly has helped and sort of should help going forward. I think there's talks of them taking a long-term fixed price deal for their electricity with the low gas prices. So you'd rather they were using renewables long-term for the sort of the green side of things, who want to be, saying they're using renewable energy rather than gas. But yeah, profit's profit. So you don't have to wait for the quarterly reports with Bitcoin miners. A lot of them do a monthly operational update, and this is Cleanspark's. So they mined 598 Bitcoin in March. These normally come out sort of within couple of days of the new month, and they're doing a 50 megawatt expansion, and they've already purchased the machines for this, so that's pretty good. The hash rate was 6.7 exahash and is expected to increase to 8.7, so in theory there shouldn't be too much dilution needed to get to 8.7. But they do have a calendar year-end goal of 16, and they have basically said unless sort of Bitcoin rockets up in price, then they plan to dilute and issue shares to get to this 16 exahash. They don't want to be sort of borrowing against any of their equipment or just sort of unsecured borrowing. So yeah, they're issuing equity and sort of reasonably open about it. So that's good, I guess. They don't hold anything basically at all. They hold 196 Bitcoin. This was 100 the previous month. So again, as I say, very, very lean ship. If we sort of suddenly got a drop in Bitcoin, then they'd be sort of kind of screwed. But as long as things are on the up, then should be reasonably good. So just looking at some of the competition, this is a slide from Anthony Power on Twitter. Very useful chap, worth a follow. Sort of provides some really good information and comparisons. And he's sort of showing you've got Cleanspark here at in February, 6.6 exahash, and I would say one of their sort of close, or a couple of close competition miners probably would be Cypher Mining, but also Bitfarms. So Bitfarms are at 4.7 exahash and mined 387 in February, where Cleanspark did 576. They hold 400 Bitcoin, which is a bit more than Cleanspark, but sort of nothing to write home about compared to some of the big holders over on the right-hand side here. And yeah, all the rest of these sort of basically correspond to the exahash. Bitcoin mined per day is obviously going to be less per month and that sort of thing. And yeah, if you come back to, so Bitfarms are sort of doing just over 2/3 of Cleanspark's exahash and Bitcoin mined, and yet they are 219 million market cap. So a little bit of a mispricing potentially there. They don't, as I say, they don't hold, much more Bitcoin. 405 Bitcoin, even by today's price, is 11 million. So it's nothing, as I say, nothing to write home about there. So yeah, I do think Cleanspark are sort of a little bit unfairly written down, but it gets worse. You've got Riot Blockchain over on the right hand side here, 9.8 exahash in February. They have since gone up, I believe, to 11.5, so it's not quite double Cleanspark's exahash. And again, in February they weren't really making the most of it, 675 versus sort of 576. But the Bitcoin hodl, 7,058 Bitcoin. So I didn't check whether this had gone up in March. Just looking at Riot's operational update. So in March they did 695 Bitcoin, not that much more than Cleanspark, and they held 7,072 Bitcoin. So 7,072 at today's price is $200 million, which is very, very nice, of course, but having double the exahash, or not quite double the exahash, and 200 million on the books versus Cleanspark's basically nothing, they're $1.5 billion dollars in market cap. Obviously, enterprise value, if you knock the sort of cash and Bitcoin on the balance sheet off, then it comes down, but straight market cap is sort of 8 times Cleanspark's. So again, looking at sort of comparing various miners, they do seem to be quite a way under the competition. This I thought was a lovely chart from Sebastian. Again, sort of a decent person to follow. Comes out with a lot of solid information, and is sort of somebody I look to for the very recent calculations on sort of various miners, and sort of charts like this, pretty handy. And yeah, sort of looking at the competition, he's sort of done market cap and hash rate comparison over here, and you sort of have Cleanspark down here in sort of the lower area around Bitfarms and Hive, TerraWolf and Iris. Obviously you've got your Riots and Marathons up here, but again, sort of Riot at 10.5 exahash here, Marathon at 11.5, but they're sort of huge difference in market cap. 1.5 billion and sort of 1.3 billion for Marathon. Cypher Mining do a little bit less, again about 2/3, basically the same as Bitfarms, but they're quite a lot more than Bitfarms. Hive, who I sold for Cleanspark, are at 263 million, and they hold sort of 2,000 Bitcoin, I think, which kind of think I would rather have exahash than Bitcoin on the balance sheet, really, because sort of Bitcoin on the balance sheet isn't a leveraged play on Bitcoin, which is why you would want to be in these miners, really. If Bitcoin goes up, then the Bitcoin on their balance sheet goes up, in theory, 1-to-1, which, you know, I'd rather just hold the Bitcoin myself if I was going to have that. The whole point of sort of having a miner is that if the price goes up, then their profits go up at a leveraged rate. You know, price goes up 10,000, or if the price doubles, for example, then their profits might sort of 3 or 4x, and that's the whole point. You don't want sort of a miner with a load of Bitcoin on the balance sheet, but sort of a small amount of exahash, because price goes up, then it has a lesser effect. The amount that they're mining goes up and their profits go up, but really what you're paying for is the Bitcoin on their balance sheet going up. So in theory, Cleanspark should be more of a leveraged play than some of these others. And then, yeah, you've got sort of smaller ones here. Argo Blockchain, the bane of my life, should have held on. 2.5 exahash for what is now $92 million dollars. It was sort of at 25 or so because they thought they were going bust. Core Scientific have gone bust and are in sort of bankruptcy proceedings. That's why they're all the way down here in market cap, but at 16 exahash. So they are the largest miner in the world. But yeah, don't know what's going to happen to them. But yeah, so that's a nice little comparison, I thought, of sort of where Cleanspark are potentially the most undervalued of all of these. So a fairly big part of the reason, it seems, for this discount is the dilution. There was a little article on Seeking Alpha about them last month, and you sort of come down to the risk section, and they sort of detail, or one thing that did hit them, they dropped their year-end projection from 22.4 exahash to 16. I kind of think 16 is fair enough. 22.4 would have been rather crazy, and that was a sort of a joint venture project, it seems, that isn't going through just yet. Could be sort of next year, might not, but yeah, even if they get to 16 is reasonably good, I thought. But they expect to spend between 210 million and 280 million in capex this year. So they've asked for authorization to offer 100 to 300 million shares. And if you come over to their financials, they only currently have 77 million shares outstanding. So even sort of the low end of that, of 100 million shares, would be more than the entire market cap. So diluting over 100% this year, and obviously 300 million shares would be, 4x dilution, 400% dilution. But the stock is $2.46, I believe, as of today. So 100 million shares would be $246 million. And that is what they're saying they expect to spend this year. You've also got Bitcoin obviously risen to $28,400 as of today, and sort of as they say, their costs coming down due to sort of natural gas. So you've got 500, nearly 600 Bitcoin mined in a month at sort of 28,400. So got about $17 million in revenue coming in every month. Obviously this will go down slightly, but increase because they're expecting to go to 9 exahash in a month or two. So 17 million coming in. Obviously a fair amount of that had to go out on electricity cost and sort of overheads. But potentially they won't actually need to issue shares to to spend all of this capex, they do have revenue coming in. So, yeah, I would think potentially, I can't see 300 million shares. I mean, that'd be nearly $750 million, where they're saying the top end, they only want to spend 280 million. They did come out with this sort of at the beginning of February, so Bitcoin price was lower, and yeah, maybe they thought sort of share price would go lower and they would have to issue sort of more shares, but unless they're offering these at a huge discount, which they don't seem to be, they're calling it an at-the-market offering, then potentially they won't even need to issue 100 million shares. So I've put this into my model that I used for Hive Blockchain before, and so I've used sort of an estimate of mining, and I've taken this from April 2024, so this is after the halving, and so 520 has sort of come from them going from 6.6 exahash to 16, with a bit of a drop for difficulty going up, because the hash rate is sort of rocketing up at the moment, so they'll get less Bitcoin mined per exahash, and then divided by 2 for the halving in April 2024. So it's a little bit pie in the sky, similar sort of with a lot of these figures really. It's only an approximate model. Lots of these figures can be wrong. But yeah, I got to sort of 520 Bitcoin mined per month. And then I've dropped that by 1% every month for difficulty increasing from there. I'm sure they'd be sort of looking to expand next year as well. So it wouldn't necessarily happen, but sort of you've got to be conservative. So I've dropped it by 1% a month. And adding that all up gives me 5,908 Bitcoin mined for the year from April 2024 to March 2025. Again, looking a little bit into the future. But I've sort of modelled their costs, depreciation, admin expenses, and sort of share-based compensation using various Bitcoin prices. So these are sort of taken off their current expenses and sort of increased for, obviously they're expanding, so overhead will go up a bit, direct costs will go up a lot because every miner is using electricity and that sort of thing. General sort of overheads and admin won't necessarily go up quite as much because there'll be, synergy. People can deal with sort of multiple facilities, so I've not increased that quite as much. But as I say, this is only really sort of a rough model to be used. It's not going to be 100% accurate. But so at $40,000 Bitcoin from, if we said $40,000 for the whole of the year from April 2024, I do actually get to a negative share price. So we're obviously hoping Bitcoin is higher than 40,000. This is after sort of adjusting their cash on the balance sheet and debt and Bitcoin on the balance sheet. So yeah, it's not very good. And this is going from 77 million shares to 150 million shares. So I've sort of assumed that they won't actually need the full, even the low end of their 100 million shares. So thinking that they'll hopefully be able to spend some of the sort of monthly revenue that they're getting at the moment on CapEx, which would be good. So if they get to 150 million shares, then yeah, that gives me sort of minus 45 cents per share, which isn't very good. If Bitcoin drops to $30,000, then yeah, it goes to minus $3.12, which really isn't very good. But yeah, we're hoping it's going to be well above 30,000 by the halving. So $60,000 Bitcoin, which is not far off the all-time high, gives you a $7.68 share price, which would be sort of a 2x in nearly a 2x in Bitcoin price, and would be a 3x roughly on the stock price. So that's not too bad. But then this is what we're sort of all hoping for, $80,000 Bitcoin, which would be sort of 3x on Bitcoin's price, gets you to $21 in Cleanspark's price. So that's nearly a 10x for a 3x in Bitcoin's price. And then the lofty 100k that we were all hoping for last year, or sort of even in 2021, would get you to $40,000, a $40 share price. So what's that? Not even a 4x in Bitcoin price from here, and you're looking at sort of, what is that, 15 times share price. Again, pie in the sky figures really, but you've got to model it somewhere. So a 16.5x for a 3.5, 4x in Bitcoin price. So it's a risky bet, obviously, but this is what I'm taking. This is sort of the only thing I can really buy in the ISA, aside from sort of buying MicroStrategy and that sort of thing. And basically, that sort of goes back to my opinion on Bitcoin on the balance sheet. MicroStrategy is basically sort of a Bitcoin ETF, with a bit more risk than just holding Bitcoin yourself. So I would rather sort of take a bit of a risk and go for a bit of leverage. So yeah, this I thought was an interesting model. Obviously, if they do have to end up diluting a hell of a lot more, maybe they get to 200 million shares, and then you get down to sort of $15 share price and sort of $30 on the 100k end. But even $30 from $2.44 wouldn't be so bad if we can get to 100k Bitcoin. Obviously, if it gets much worse and they need loads of dilution, then $20. But again, it's 8 times the share price. So I don't think they're going to need all that much dilution personally, but we'll see. So I will put these back to 150 million shares, and hopefully keep adding to Cleanspark. Just looking at having a quick look, I put sort of similar figures in for Bitfarms and annualized it from April 2024. Mining amount is less because they don't seem to be expanding all that much. They don't seem to want to dilute quite as much as Cleanspark do. So I get to 2,877 Bitcoin for the year after the halving, which obviously makes figures look worse. And I've been putting some sort of costs in there based on the last sort of quarter or two. And it doesn't look nearly as good. I get a negative share price at 40,000, obviously 30,000, but also at 60,000. So that's not too promising. I'm essentially saying the company is near enough worthless even at $60,000. So it takes 80,000 and 100,000 to actually get positive share price. So I am buying options on Bitfarms, sort of partly because they're a lot cheaper share price than Cleanspark, but I'm sort of thinking maybe I should just bite the bullet and go Cleanspark, basically. They just seem to have a better potential outlook. So there's a bit of a frivolous lawsuit against them, sort of saying that they haven't grown as much as they'd promised before. Kind of think that would get thrown out, to be honest. And people are whinging that the insiders are taking an awful lot of share-based compensation and they're not buying shares. So you would think maybe they're not bullish on the company, but I wouldn't see that as all that bad, really. But it's potentially a nice sort of 2-year hold. So leave your thoughts in comments below, and like and subscribe. Oh, and join the free Discord in the description. See you soon.